I really love put spreads. I think they are a fantastic way to make money in the stock market when you do not have a lot of upfront capital to work with, especially since you can open them up on stocks that are just way more expensive than what you have to deal with. You know, Nvidia, this is a $370 stock. If you only have like $500 to work with, like when I was completely starting out, they're a great way to just consistently collect premiums. Now, if you're completely unfamiliar with put spreads, that's going to warrant a whole nother video to explain these. There's a lot that goes on with options, and to give you a very general idea, it's an options play where you buy an option and you sell an option, and you do this to cap your max risk. Getting into why I don't like put spreads right now is the economy, stock market is crazy. It is very hectic. Plays like this were stuff I would do a lot, especially with Nvidia, and I would easily get, $70-$80 every single week, and it was really consistent. I love doing this on weekly options because that's where theta decays the most. So you could pretty easily just drag in money, and it is sort of a bullish position because obviously if it goes down to the strike price, you have a maximum loss of that difference. In this case, $5 times 100 because it's an option. That's 500 minus a premium you collect at the beginning. So as awesome as these are, because they let you just consistently rake in money and turn that $500 into $600, $700 after just a couple weeks, you're risking over $400 to make like $70. And it's always going to be like this. Your max risk is going to be way higher than your max profit when it comes to put spreads. And with the current economy we have, I understand that IV is high for a lot of stocks because things are uncertain and everything is just going crazy. There's a lot of shifts. So you can pull out some fatter premiums, but you got to realize you need to get a lot of these right because one mistake will set you back to square one. And if you really can't fund your account with any more money, you're kind of screwed. It's going to be hard to dig back up there. Right now, I do not feel like this is the ideal time to be opening put spreads. I mean, again, you can because things have high IV. There's fat premiums. There's tons of people. There's such a huge divide between bears and bulls right now, but you're risking a lot. I was opening put spreads on Nvidia, and I was doing 330 a lot. And there were a couple times where it was just diving below that. And I was tweaking out. I was like, do I just buy now and cap my max loss? Do I get things lower? But I waited it out, and all of mine expired out of the money, thankfully. So I never lost money doing put spreads, but I had tons of close calls with Nvidia. Same with GE. It's crazy out there right now. I like put spreads because there's always people trying to be bearish on a stock. There's always people trying to hedge their bets, and put spreads for a while almost felt like free money. Like you would just siphon money from those people trying to hedge or just betting on ridiculous swings in the market. You can consistently get money after week. Money each week. But we've just had ridiculous ups and downs lately. Looking at SPY, which is a great tracker of the stock market, we had this huge spike up and then a giant spike down. Imagine if your options expired, around this time. You would be screwed, especially because sort of for a little while here, this was like the new norm. The growth, the ups and downs of the current economy are like record-breaking. They're absolutely ridiculous. And that's the thing really turning me off from put spreads, is that if you get one wrong, you undo weeks, maybe months, depending on how deep out of the money your spreads were. you are always going to risk more money than you make. And right now with the current economy, that kind of feels like just spinning a roulette wheel, hoping that your close price is just on black instead of red. I'm not a fan of them right now. I have a buddy who lost money on Visa. He did a 195. Thankfully, he was able to close it out right as it started to dip. But they're crazy right now. Put spreads, really awesome tool. I like it, but because of the current risk, I'm not currently going into them. I know friends who have started to lose money on them, and I've gotten way too many close calls with them for me to continue with this current economy. That's just my 2 cents. I want to give some input. I know put spreads are really popular, especially among new investors, because you can make money with not a lot of capital. You're just looking at difference in between strike prices. And if you look at NVIDIA, again, that's a $370 stock, but the difference in strike prices is $250. Like, you could sell put spreads with less than $250, assuming you get approved for options trading. So they're awesome, but I think they're sort of risky right now, especially considering so many stocks are trading so far below their previous averages, right? This is not an awful time to be in stocks, in my opinion. All right, that's all I had to say. Hope this is helpful to you guys, and hopefully you can evaluate and honestly see if the current risk of put spreads are for you. Again, I don't hate them. It's just right now I'm going to chill on higher risk stuff like that.